Good morning from London. I'm Kriti Gupta alongside Guy Johnson and Valerie Tytel. We're an hour away from the opening trade. Here's what you need to know. President Donald Trump unveils a slew of tariff rate increases and extensions on trading partners, setting the average tariff rate out of the United States at just over 15%. Plus, the White House sends letters to 17 of the world's largest drug makers in this latest push to pressure pharmaceutical companies to lower their drug prices. And a tale of two tech behemoths, Apple reporting its fastest quarterly revenue growth in 3 years despite the tariff impact, but Amazon failing to impress Wall Street. Val.
It's 7 a.m. Let's check in on these markets. Hour ahead of the cash opening trade in Europe. Both S&P futures and Euro Stoxx futures in the red this morning. They both have declined around 1%. So it has been a theme of equity weakness across the week. Euro dollar, though, if you want to talk about weakness, down 2.7% on the week. Euro dollar strength, that trade has really washed out to start the summer. It's been the pain trade of July for sure. U.S. 10-year yield, really, it's about where we started this week. Not a lot happening in fixed income. The countdown to the opening trade starts right now.
Friday morning, good morning. So as we all know, it has been the dominant narrative of the week. What am I talking about? I'm talking about the earnings story. It has been day by day the thing that we have focused on. That kind of shifted a little bit yesterday. The tariff narrative certainly back on the agenda and having a big impact. We'll talk about the pharma sector in just a moment. And of course, we've got non-farm payrolls coming up a little bit later. We're not quite done with earnings for the week, though. We've got IAG, the airline group, out with numbers first thing this morning, continuing to see robust demand, confident in its long-term outlook. It looks like it's beaten at a top-line level. Looks like the operating line is a little bit of a beat as well. Load factor a little light, but nevertheless, this looks like a solid set of numbers. Remember, there is all kinds of other factors in the mix for this company. We'll come back and talk about that a little bit later. But let's get back to what I think is probably the main event of the day, and that is the tariff story. We're here. It is the 1st of August. And a few surprises, Kriti, out there.
A few surprises. I think we were expecting this to all be tied with a nice little pretty bow on August 1st, or maybe an ugly bow, but certainly a bow, and we don't get that. We have an extension on Mexico. We still have a higher tariff rate on the likes of Canada, 35% up from 25%. That's on non-USMCA products. A conversation with China that is still ongoing. And now some carve-outs, potentially, when it comes to Switzerland and other countries.
No, but it seems like the theme for this week is so more certainty is a good thing for the markets. They seem to be cheering the fact that now we can think about other things other than tariffs every day. And this might be something that's clearly in the rearview mirror.
Do you think it's in the rearview mirror?
Yes.
Was that the lesson from yesterday? Because the equity market's rolled over towards the end of the session.
The number is now more set. The average global tariff rate for U.S. imports, 15%, around 15%. I think that the market is going to like that certainty that we're not risking a number closer to 20. And now we just have to sit here and wait to see how the U.S. economy, how the global economy, global trade reacts.
Is that a placebo, though? Is like, because we don't have the details of it, because these are kind of frameworks, because we don't have the carve-outs yet, the idea that 15%, is that a placebo effect? Is that a sugar pill?
I don't know. Normally, the narrative in markets is it's better to travel than arrive, right? So you kind of we have arrived now in theory, but I don't think, to your point, Kriti, we haven't got all of the details. But to your point, Val, in some ways, actually, maybe the reality now becomes a factor that markets have to think about, because I think up until this point, the markets kind of ignored the reality of all of this. It's just like, we want certainty. Certainty is what we want. Once you get past that kind of sugar high off the certainty, do you have to deal with the reality? And I do wonder whether that's now what the narrative is going to look like. I don't know. Why did markets sell off yesterday? We've come a long way really quickly.
It was month end. There's a lot of different price action that happens. I don't think you can point fingers to the fact that the market was selling off due to the August 1st deadline approaching.
There was no surprises in there that caught the market on the hop. There was no kind of factors.
And hardly any move in FX, even on these countries that, like, for instance, Switzerland coming in with a higher than expected number. Dollar Swiss hardly budged.
Except the peso did, and the Canadian dollar did. And I think from a kind of domestic U.S. perspective, you are starting to see the focus shift largely and squarely on North America, not necessarily the rest of the world.
Cat and Max are both unchanged. But to change the subject, now I think that in some ways we're learning more hints that it's not just tariffs that Trump can use as threats.
Yeah, that's Valerie sets me up nicely for the pharma conversation, which I've slightly gone down a rabbit hole on this morning. So I've got the list here. You know, the biggest market cap stock in the pharma sector in Europe is what? Roche. Is it on the list? No. Why has it not got a letter? I don't know. What is happening here? I think there's a lot of open questions about this. So he wants to lower prices. There's a lot of notes out there this morning. I think I found 2 so far, but I'm sure there's more about the legal kind of story around whether or not he has the capacity to do this. I think that's going to be an issue here. What happens? Do other countries have to raise their prices? Would that be the logical thing for pharma companies to do? Would that be something that would be acceptable elsewhere?
Well, in this letter, he specifically said he wants to help these companies negotiate higher prices abroad so they could give price cuts to U.S. consumers.
Which, do you think the NHS is going to tolerate that? Do you think everybody else is going to tolerate that?
He's offering his negotiation skills globally.
Yeah.
the art of the deal. I think Roche is going to get mad at you for pointing out they're left off the list.
But why? The biggest market cap stock in Europe is off the list. That bit I don't know. You can also fold in the Switzerland story as well, which I think is really interesting as well, in as much as Switzerland is going to be hit with 39% tariffs. I don't quite understand why the Swiss are being...
hoping you'd explain to me this morning.
I still can't figure this one out, so I'm going to park that one. But nevertheless, that would presumably raise prices because half of Swiss exports to the United States are pharma products. So presumably, therefore, those prices are going to go up in the United States, assuming that that Roche, I'm assuming that Roche ultimately will be hit by this, but Novartis don't absorb the price. That gets passed on. So prices are going to go up, not down, because of that. Do they therefore get a double whammy of having to lower prices twice? This is really confusing for the pharma sector. But does it all come because he tried this in the first term and it went nowhere? He's trying it again. Is it going to go somewhere this time? I think there are big questions about that.
But can we just put this into context as well? Not only in his first term, but this is something that Joe Biden tried to do as well with international companies, not with the tariff negotiation necessarily, but he did try to do it from a different regulatory perspective and including kind of more scrutiny on those acquisitions, which is something that we haven't seen Donald Trump do, which he could leverage domestically as well. So that's one aspect to all of
Well,
this.
let's move on to the continuing earnings story. It was day 2, round 2 of Mag 7s yesterday. Apple coming out with a beat, both on iPhone sales for the last quarter and then on their revenue guidance for the current quarter. So Apple shares moving in the green. Their guidance for revenue came in above estimates. They did give some numbers when it came to their tariff costs, citing $1.1 billion for the year, and that their tariff pull forward. So this is the consumers trying to front run tariffs caused only 10% of their sales surge. Most of that was U.S. consumers, and most of that was the activity in April. So for Apple, they think that tariff pull forward is done and dusted, and they want to think about their solid numbers for this quarter as not necessarily being tariff related.
Apple feels like old news in some ways. There's no AI narrative here. That was something that was missing yesterday. All of the other companies this week, we'll talk about Amazon maybe, dominated by the AI story.
Yeah, well, Amazon...
We're building something physical here.
Yeah, well, Amazon gave I think a glimpse of what happens when CapEx spending isn't backed by a robust core business. Investors seem to penalize the fact that AWS, its cloud business, the guidance there wasn't as strong, the revenue numbers not as what the market expected, and the market is starting to punish Amazon for this big CapEx spending. They're one of the biggest in terms of the Mag 7 on their outlay or their guidance for this current year. I think it's just setting up an example of, the fact that Meta and Microsoft, if they fall into this trap, it could be something they could be punished for. So core business really has to be solid in order to justify the CapEx spending.
If you build it, they will come, seems to be the narrative at the moment. You just got to really hope that there is enough business. I think there's an interesting piece in the FT this morning kind of comparing and contrasting the big fibre build-out that we had in the 90s, in the run-up to 2000s, and just the overcapacity that was created that then imploded and contributed to what happened with Stoxx at that point.
Well, one angle of Apple we haven't hit specifically is the China story.
Yep.
They just shuttered one of their first retail branches. This was a massive story this week. Another time of their Chinese sales actually topping their estimates, despite the fact that they're moving their supply chains to the likes of India, which is also going to be subject to a tariff story as well as that is ramped up as well. Amazon, yes, it missed on their profit, but it still beat on some of their revenue numbers. So it didn't get the A++ impressing Wall Street bait that Microsoft got.
I just want to flag Figma as well. The IPO yesterday. Oh my lord!
Underpriced,
I would say. The timing was perfect.
Maybe it tells you something more about the market. But what was it? A 250% IPO pop? Nice business if you can get it. Well, that leads us into our guest that we're going to be talking to very shortly. Stefan Bujner, I'm sure, would like to see that kind of performance on EuroNext. He is the CEO, out with numbers last night. We'll come back and talk to him in just a moment. Emmanuel Cao, Barclays Head of European Equity Strategy, is going to be joining us, as will Nancy Curtin, Alti Tiedemann's Global CIO, Ali Renison, SEC Newgate Associate Director. I think she's in the States. I think she's getting up early for us, and she's going to be here talking to us about trade, Val.
Let's also look on what's ahead today. We do have non-farm payrolls. That's the big one at 1:30 p.m. But before we get there, we have Eurozone CPI. A lot of attention will be on the core release at 10 a.m. Then things move on. Focus on the U.S., not only non-farm payrolls, but also ISM manufacturing and UMISH consumer sentiment later in the afternoon at 3 p.m.
So what I'm finding interesting about the NFP is that the whisper number, which recently has been below where the survey number has been, is well above where the survey number is. So the survey number is 104, but the whisper number is 120. Is the market setting itself up for a positive? We need to see a beat here, according to that.
Well, look, I'll raise you another one. Our own Anna Wong, our U.S. chief economist, who has done pretty decently in calling these numbers, is at 160, one of the highest in the survey today.
Well, where would the cracks even be if we're talking about a slowdown? We haven't seen that in the last couple of prints. In fact, it's always surprised to the upside, and it's always been almost to the 200 mark. So this would be a real shocker if it came below 150.
Well, I think that the cracks could start to appear when it comes to the unemployment rate. Even Powell talked about this, the fact that we have labor supply dropping in tandem with labor demand. You know, that's not a very good underlying place for the labor market to be. And if one of those drops more than the other, you know, the unemployment rate could rise.
If you plug in the immigration story, what number do we need to see for this number to be steady? And that clearly is coming down. Like it could be kind of 50 to 70, 75, somewhere around those kinds of levels I've seen, just in terms of the standstill. So you get a number that's more positive than that. Once you take in the fact that there is significantly less immigration coming into this economy, then maybe actually these are still incredibly positive numbers that you need to work your way through. Anyway, we'll bring you those numbers a little bit later on. I'm sure this Valence team will have some fantastic coverage coming up a little bit later on. What else you need to know this Friday morning? The US President says Steve Witkoff will be heading to Russia after his visit to Israel. The special envoy is making the trip days ahead of the August the 8th Ukraine ceasefire deadline Trump has given President Putin. Trump has said he would impose 100% tariffs if Russia does not comply with his calls for a truce. London Heathrow Airport has submitted a £49 billion expansion plan to the UK government. The proposal includes a new terminal, a controversial third runway, and a rerouting of the M25 orbital motorway. That all sounds fun. Heathrow says the new runway could be operational within a decade and would increase annual passengers from, get this, 82 million to 150 million. And the UK Supreme Court will release its long-awaited ruling on car finance cases just after 4:30 p.m. London time today, i.e. after the market has closed. The court is deciding whether or not to uphold an earlier ruling which found that hidden commission payments to car dealers were unlawful. If the ruling is upheld, Lloyds, Barclays and Close Brothers amongst firms that could be on the hook for consumer payouts that analysts suggest could reach £38 billion.
Coming up on the program, another check on IAG at the open after the British Airways owner posted its latest earnings figures. Plus, of course, Switzerland in the crosshairs of both tariffs and drug price ultimatums. We'll follow the Swissy throughout trade this morning. But up next, we talk to EuroNext. Revenue hitting an all-time high. We're going to get the thoughts from the CEO himself. If you have any questions of your own for us or for our guests, get involved in the conversation. IB plus BBTV Go is the function on your terminal. This is Bloomberg.
Is there more activity, more consumption of our data when there's a lot of volatility? Yes.
Yeah.
It's more about activity and volatility than directionality. Do we see the benefits of that? Yes. If things get a little bumpy or a bit choppy, and that creates volatility, there's still activity. There's still trading. There's a lot of risk management in that kind of environment. People are adjusting their positions. We see the benefits of that as well. So it's the nature of our business.
David Schwimmer here yesterday, of course, the LSEG CEO, joining us around the table. This after his company posted first-half pre-tax profits that beat estimates. Let's stay in an adjoining space and talk a little bit about what is happening with EuroNext. The company out with figures last night, record revenue. So top line looking pretty good. The Q2 adjusted EBITDA line, certainly a decent beat there as well. The last quarter has been good for the business. We've also got some M&A activity within the business as well to factor into our thinking as well, with the Greek deal in Athens that has been done too. Stefan Bujner is the CEO of EuroNext and joins us now. Stefan, good morning. The numbers look good. The last quarter obviously saw significant volatility. Is this something that you think is going to sustain, that we're going to see this carrying on? How did you benefit from the volatility that we saw over the last quarter?
The new normal is volatility in the decision-making in the Oval Office, volatility in tariffs, volatility, therefore, in reallocation of portfolios across the planet. What we are experiencing is not market corrections or only rotation of assets. It's a fundamental reallocation of trust across the planet, and the European markets in general do benefit from this global reallocation of trust, and we have record volumes across all the asset classes we operate.
So you think the Europe and Europe's markets are more trustworthy than American markets?
This is not what I think. It's what we observe in the reallocation of money managed by global asset managers who are increasing their strategic allocation to Europe and reducing their strategic allocation to the US, because there are plenty of businesses that you cannot price properly in the volatile, uncertain, or new normal, which is structural uncertainty and structural volatility of US environment, where it's extremely difficult to figure out what is going to be the right exchange rate, the right inflation rate, the right interest rate in the US for the coming quarters. So that has created, in addition to a new environment in terms of rule of law, this is what has created a strategic reallocation towards Europe. That's the new normal, and that is going to continue to drive volumes. But as you mentioned, please.
Stefan, Kriti in London. Despite some of those risks, of course, to the U.S. market, there's been a big concern and a big question of whether European listings can trade at the same multiples, at the same volumes, at the same liquidity that U.S. capital markets can offer. We spoke to your peer over at LSEG yesterday, really pushing back against that multiples and valuation conversation. How does Europe catch up to what New York can offer in terms of liquidity, volume, multiples?
Post IPO performance on the EuroNext single European market is stronger than on US markets. This is fact. Liquidity of the EuroNext single European market is twice the size of the liquidity on the London equity market. So there is a specific concern in London that is perfectly understandable, because as of today, we trade on the EuroNext market 10 to 12 billion euro per day, which is twice the volumes we traded on the London equity market. The aggregate market capitalizations of the EuroNext single European market is 7.3 trillion euro, which is twice the size of the London aggregate market capitalization. So there is a specific problem of competition between London and the US, which is of a different nature because of the massive different size of liquidity of the European single market vis-a-vis the US. It's true that for companies that are very specific peers listed in the US, you can get higher valuation multiples. But within the drivers, or among the drivers of the reallocation of assets from the US to Europe, there is this perception that for long, US multiples are too high, and that US market are overvalued, and that Europe is relatively cheap. This transfer of this equilibrium valuation is happening, as many of the people you have invited has probably mentioned to you. So something is changing in the European environment from market point of view is getting more favorable than it used to be, and it's a safe place in the eyes of many global managers from the Middle East and from Asia.
Well, Stefan, you talk about the U.S. market being overvalued. We were having this conversation literally 24 hours ago. If you look at the multiple, for example, of Microsoft, one of the most valuable companies in the world, and of course, one of the heavyweights in the United States, it's trading at a 33 PE multiple. Very simple metric, but that's the one we're going to use. Rheinmetall, on the other hand, one of the champions of Europe, is trading at over 50. Talk to us a little bit about the defense sector and perhaps consolidation there, or whether you think maybe the IPO story is the next phase for Europe's defense sector.
No, you're absolutely right. I mean, a few months ago, EuroNext started a program called New ESG, which is about energy, security, and geostrategy. Clearly, there is a huge growth environment in Europe around aerospace and defense because Europeans have decided to take over the control of their own defense ambitions. A significant part of the increase of security spending in Europe is going to be dedicated to buying from European players. The rest of the world is trying to buy from Europe on aerospace and defense. So it's no surprise that the large players that exist in aerospace and defense in Europe have a valuation that is growing significantly. So we are deploying all sorts of programs that never underestimate the amount of mid-sized companies that exist in this sector in Europe and that are in the process of accelerated consolidation. So over the next quarters, you should expect significant changes both in the blue chip listed aerospace companies that are still too fragmented in Europe, but also an even stronger trend on mid-sized aerospace companies.
Stefan, let's turn the attention to your business and any new possible acquisitions. I know you've looked to diversify revenue by making acquisitions in Scandinavia, in Ireland, in Italy. I see that yesterday you raised your offer to buy the Athens the Athens exchange. Are there any other regions that you have your eye on?
I mean, EuroNext is an open European project. So if single country market infrastructures within Europe want to be part of an integrated single liquidity pool, single order book, single technology platform, we are open to create a scale in Europe. And we are building the backbone of the capital markets union with this single integrated market. In addition to that, in parallel to that, we are accelerating the diversification of the top line. We discussed a lot this morning the volumes, but 60% of our top line has nothing to do with volumes. So that diversification ambition is core to our strategy.
Stefan, just a final quick question. We had David Schwimmer here yesterday. He was telling us that, and the numbers bear testimony to this, the LSE is a small part of LSEG, the overall group. If they decided to divest that, would you buy the London Stock Exchange? If it was put on the market, would you consider buying it?
Yes. The purpose of EuroNext... No, the purpose of EuroNext is to connect local economies with global markets. It is to power pan-European capital markets to finance the real economy. The purpose of LSE Group is now different with the focus on data. So we are the sweet home for all the market infrastructure that want to connect local real economy with global markets.
Okay, we should arrange a lunch. Stefan, thank you very much indeed. Stefan Bouchner, the CEO of EuroNext. Thank you very much indeed. Emmanuel Cow's coming up. We'll get his take on all of this. That could be a great deal, couldn't it? It could be a fantastic one to watch. Anyway, Emmanuel's going to be here very shortly. The European equity strategist joining us from Barclays in just a moment. This is Bloomberg. Friday morning, good morning, 30 minutes to the start of trading here in Europe, cash trading. Let's look at futures before we get to the cash. And at the moment, it looks like we are going to see a fairly negative start to the session here in Europe. Equities a little lower. The euro's been hit pretty hard this week, but we've still got a long way to go this week. I appreciate it's Friday morning, but there's an awful lot happening stateside that we need to factor into our thinking, Kriti. And the bond market's going to be a really interesting focus, I think.
Absolutely, especially ahead of that payroll story. 438 on the 10-year at the moment. You're starting to see a slight sell-off. Have I said slight? Very, very tiny when it comes to the European bond market. A lot of catch-up, perhaps, after that number over in the States. Val, walk us through that number. What will we be watching?
It's Payrolls Friday, only my favorite day of the month. Don't laugh. But yes, payrolls expected to come in at 104K. It is a step down from that beat that we saw last month of 147K. And if we do get 104K, that would be one of the lowest prints we've seen this year, going all the way back to January and February. But Powell has dragged our attention to the unemployment rate, which is expected to rise to 4.2%. I've also put the participation rate on here. I think this is an important one because we're noting that because of the deportation of undocumented workers, that we can have a dynamic where you see labor supply and labor demand dropping in tandem, and perhaps that's what keeps the unemployment rate holding steady. But that is a dynamic that economists and the market are keeping a very close eye on. I also want to talk about tech stocks because I think what happened yesterday in these earnings shows a really good example, at least to Amazon's case, of what happens when your CapEx spending becomes too much for investors to bear if you're not having a decent success in your core business. Amazon, their web services, AWS, that's their cloud business, their guidance there underwhelmed the market, and I think they're being punished due to one of the facts that they are the biggest CapEx spender of the Mag 7 this year. Apple, on the other hand, iPhone sales came in with a beat. Seems like the overarching problem of tariffs is still having an issue for Apple, but they seem to be working through it. They're also their sales from China beat as well. When it comes to tariffs, though, today is the deadline. August 1st is here, and it is looking like we are having an average tariff rate slightly higher than previous expectations, now sitting at 15.2% if the rates that rates are implemented that have been announced. Kriti.
That's a really big number indeed. Let's see how it all translates to the markets. Joining us now, Emmanuel Koo. I'm going to say that right. Head of European Equity Strategy over at Valerie. I'm sorry. Now we're covered for whatever it is. Emmanuel, we're talking a lot about what actually matters to this market, whether it's the tariff rate, whether it's monetary policy, whether it's the fundamentals. But for me, my question to you is, do valuations matter in this market when we're looking at tech still outperforming, when we're looking at European defense still outperforming and trading at massive multiples?
Morning. Well, I mean, I don't think that's been the big driver. The big driver of this market has been earnings and economy, and so far growth is holding up. What we are seeing with Q2 earnings is that demand is pretty strong, and most companies are beating estimates. So there's this kind of corporate resilience, which helps the market to shrug off all the kind of macro noise and policy uncertainty. But of course, we are getting to a point where a lot of good news are in the price. Valuation have done the heavy lifting. You have P multiples back to the high in the US. You have credit spreads pretty much back to the lows. We're 1st of August, and historically you have a pretty, weak.
August and September aren't normally good.
Yeah, August and September. So, I think there might be a temptation from an investor to take some chip off the table, given the high valuation and see the kind of lingering uncertainty and this negative seasonality.
So let's come back to the 15% that Val mentioned. We were having this debate this morning of whether or not, given that we're still figuring out some of the details, the carve-outs, the extensions for some of the U.S.'s trading partners, including Switzerland at the 39% rate, and how pharmaceuticals show up, is the 15% a sugar pill for these markets? We're talking about clarity, but how much clarity do we really have on the details? Is the number itself a little bit of a placebo?
Well, at least we have a number, right? And for the past 3 or 4 months now, we've been waiting to get some kind of a numbers. So I think there is some number we can work on. And if you're a business or an investor, you can, build some assumption and macro projection with some numbers. But look, I would take these numbers with a pinch of salt because, we had many deadlines, many extensions, and many back and forth. And, I think there was a Taiwanese president this morning saying they still expect a lower tariff than the 20% that was announced yesterday. So even though this is a final deadline, I'm pretty sure there will be some extension and some negotiation down the road, right? I think what we are looking for now, what is the impact of this tariff on growth, inflation, earnings, and the consumer, right? I think the market impact is probably already known, right? The market, had 3 or 4 months to get used to this tariff and prepare for that. And we've seen a significant polarization within the equity market. So a lot of stock exposed to tariff have sharply underperformed, have seen big earnings downgrade as well. So within the market, there is some degree of preparation for this tariff. Now we're yet to see how it will impact the economy, earnings growth, and that's going to be the story for the second half of the year.
Yeah, so there's still a lot of unknowns on how tariffs impact the economy. But what's your take? Who pays the tariff? Is it the exporter or the importer?
I think that's going to be probably both, i.e. there should be some inflationary impact on the U.S. The U.S. consumer will pay some of that. And I think that's putting the Fed in a pretty tricky situation. Now, obviously, corporate margins outside the US might be hit as well, right? So far, we are seeing very little impact. But, tariffs are yet to take place, basically. But we are seeing, the market and a lot of companies talking about tariff as an excuse to be concerned, but not yet seeing the impact on that. And again, this is, I think, what is going to shape the market in the second half of the year. Again, I would just mention that for the case of Europe, a lot of exporters, dollar earners, tariff-exposed stocks have seen earnings estimate cut 15-20%. So I think some of this tariff is already baked in expectation. Question is whether there is a broader impact on the economy from this tariff overhang.
Emmanuel, do you think some European companies are underestimating the increased competition from China that could possibly happen if China dumps more goods or exports more goods to the EU instead of the US? Is that something that's been underestimated?
I don't think it has been underestimated because, again, a lot of companies which have exposure to China have been massively underperforming. We've got our Chinese baskets. The Stoxx in Europe, which has the biggest exposure to China, is down 5% this year, and the market is up 10%. So you have a 15% underperformance from this Chinese proxy. So I think there is a lot of chatter about that. And if you look at German cars, for example, which are definitely in the eye of the storm, they've been underperformers for a long time on the back of this overcapacity concern and in the price war concern. But, it is known now. Are we going to see evidence of that is a possibility. And again, that's why you have this extreme polarization within the equity market between the domestic tilt companies, the financials, the utilities, which are doing extremely well this year, and the exporters, which have been basically underperforming and someone else uninvestable given this tariff effects and China concerns.
The CEO of EuroNext was just talking to us a few minutes ago. He said there is a, quote, fundamental reallocation of trust in the world, away from the United States to Europe. Do you agree with him?
Not completely. I think there's a little bit of this Sell America, which obviously started this year with DeepSeek, right? So I think the bulk of the unwind of tech position was a tech-driven issue at the start of the year when there was a question mark on tech and etc. But what we've seen in the last 3 or 4 months is, again, money going back to big tech, US equity market outperforming. And what we are seeing most recently, which I think is an important development, is dollar bottoming out again. So I think there is definitely appetite for diversification. I think a lot of clients realize that there is maybe too much capital invested in the US, but we are still missing the growth narrative outside the US. And as it stands, you have a pretty strong consumer in the US. You have a pretty innovative corporate sector. And, ultimately the dollar is starting to show some stability.
Is the dollar the tell here in terms of this market? It's been the euro's been crushed this week.
Yeah.
Is that telling us about there's been a fundamental shift in investor perception?
I think we are maybe going back to what was the playbook at the start of the year. And, nobody really saw it, expected dollar to weaken so much. And now maybe we are back to this America first template where U.S. economy is holding up, dollar is pretty strong, and ultimately tariff will come with FX depreciation for a lot of exporters to the U.S. So I'm not completely convinced that capital is going to flee away from the U.S. for good. I'm just saying there is a case for diversification, but we are missing the growth support outside the U.S.
Do you think the Trump? This is the interesting thing. Do you think the Trump administration would accept? Everybody else gets hit, but you get whacked with tariffs, the currency goes down. There's a little bit of a balancing factor that comes into play. Do you think, this is the question, will the Trump administration accept that? Because we all thought at the beginning of the year that there was going to be a huge focus on FX. But that hasn't happened in the way, but maybe it happens now that everything else depreciates against the dollar and that balances out some of the tariff narrative that we're getting from the White House.
No, yeah, I mean, you could definitely argue that Trump needs a weaker dollar in order to have this manufacturing renaissance. And what's happened just in this month of July has kind of given him a big headwind to that. But it's all a matter of whether it continues, this dollar strength continues. Do we totally unwind the dollar weakness of the first half? And you can even tie that to the U.S. exceptionalism trade that was buried in April. Is that going to have a renaissance? Is that going to come back given the outperformance we've seen in tech stocks of late and their reporting season?
I mean, we think dollar is going to be less of a one-way trade in H2. So we have dollar at 113, euro dollar at 113 by early next year. So as I said, strong U.S. economy, pretty high inflation, and then what was the condition for Japan and Europe to get a deal with the U.S.? The condition was to invest billions into the U.S. Right, 500 for Europe, 600 for Japan. So if you have billion or trillion of dollars being invested in the U.S., that should put a floor under the US dollar.
Wait, that's the foreign direct investment narrative there. When it comes back to the tariff story, how cost prohibitive is it? It kind of sounds like it isn't that cost prohibitive when it comes to manufacturing, when it comes to growth.
I mean, time will tell, right? But, I think there is an inflationary impact from tariff that we just discussed, that we're seeing inflation, all else equal, will be higher because of tariff in the US, which, again, will prevent the Fed from cutting significantly. And I think the rate differential has been completely ignored by the FX market this year, right? The ECB cutting 3 times this year, the Fed on hold. So there's a big gap. There's a big premium, basically, on the US dollar because of this policy uncertainty. Ultimately, if US growth is holding up and if inflation is high and the Fed is not able to cut rate as much as the other central banks, again, that should maybe put a floor under the US dollar.
We were talking to Mike Masika yesterday on our markets desk. He was suggesting that defence, there's no price. He just kind of, European defence stocks are worth whatever you're prepared to pay for them. And that could be multiples of where we are now. That story kind of feels like it's held water this week and has held up scrutiny a little bit. But the pharma, what do you do with pharma right now, given the uncertainty that now surrounds that story? We've got these letters going out from the Trump administration, which weirdly don't include Roche, which I don't understand. But there seems to be just a complete lack of clarity around this space in terms of pricing, access, tariffs. How investable is European pharma right now?
I mean, we're seeing a lot of this policy risk is in the price. And again, pharma was in the end of the storm because it's a big tariff loser and it's a big dollar earner as well, right?
Yep.
So the mix of tariff uncertainty and dollar weakness was a basically double whammy for the sector. That's why it's done so well. So we recently cut or closed the underweight on the sector, saying there's a lot in the price. And now to get overweight the sector is a bit of a stretch because, again, we are still in a headline-driven market. There's every single day you have a new reason to be nervous about tariff and trade, etc. So sector is not out of the woods yet, but which is very frustrating because earnings, apart from Novo, have been pretty decent, right?
Yeah.
So the sector is delivering on the fundamentals. We're seeing, again, a lot of the FX drag is in the price, but you are still vulnerable to headlines and tariff uncertainty. So, we think a lot is in the price. We will not be short anymore, but we accept there's going to be a lot of noise. And for now, the investment case to be overweight is not quite there yet.
Manuel, great to see you. Thanks very much indeed for stopping by to see us this Friday morning. Manuel Coe, the head of European Equity Strategy, joining us from Barclays. What are we going to be talking about next? We're going to come back to that story around what is happening with the pharma narrative. We saw the letters going out yesterday. Trump wants lower prices. We'll talk about the impact that's going to have on European stocks first thing this morning. Interesting, a bunch of European stocks on that list. Roche not on that list. I'm sorry to keep kind of reinforcing this. Roche has the biggest market cap of European pharma. And it wasn't on the list. Anyway, we'll talk about that next. This is Bloomberg. Twelve minutes to go until the market open here in Europe. Looks like we're going to see a fairly negative start to that trade when we get to it in a few minutes' time. We're going to take a look at what's happening in the pharma space. There's a few earnings still coming through as well. One of my recent discoveries, I have to say, is maple syrup and ice cream, which I think is absolutely delicious. And to be honest, I'm happy I've discovered it now because it looks like the Americans are going to struggle to enjoy this particular treat as we watch what happens with tariffs over in North America, Kriti.
We got to get you to try some avocado ice cream. I think that's where things are headed, at least in terms of delicacies in North America. But I think that brings us nicely to two major trading partners of the United States that have tariff rates and tariff extensions on them. We keep talking about when that tariff rate is going to show up or going to start to show up in the inflation data or going to start kind of eating into the consumer. Well, here's one theory. Maybe it's because we don't have clarity on the three largest trading partners for the United States. Maybe that's what's taking a minute to actually show up in the data. Let me just walk you through this because this is China, of course, the imports that are coming in from China, which is the number 3 trading partner with the United States, despite being the second largest economy in the world. That's in the orange here. The white is, of course, Canada, and then the blue is Mexico. This is going all the way back about 10 years here, and you can really see those imports have increased, with China, of course, being the most volatile of all of them. But to me, what's more interesting is what's actually happening with Canada and Mexico, because, of course, we have the USMCA agreement, which Donald Trump had negotiated and forged in his first administration, his first term. But I think it's really crucial here that in the last 24 hours, we've heard of an extension when it comes to Mexico, and we've heard of an increase in the tariff rate of exempted items from 25% to 35% when it comes to those Canadian tariffs. And I think that's really crucial because when we're looking at the imports from that region, we're talking about lumber, which is exempted under USMCA. So that's going to be one to keep an eye on in terms of construction costs, housing costs, etc. Oil, part of USMCA. Avocados and tomatoes, also part of USMCA, key ingredient in the avocado ice cream, and of course cars as well, which is going to show up in the likes of Ford and GM. But when we're talking about market reaction, I think this is really where it's crucial when it comes to the peso story, because Val mentioned it this morning. It is unchanged, but you did see a little bit of reaction there, and that's what this spike is, this strength that you saw in the extension when it comes to that 90-day conversation between Claudia Sheinbaum and Donald Trump. And I think this is where I want to go next in terms of what that market interpretation actually is. I've got the perfect person to weigh in. Asia Markets Executive Editor Paul Dobson joins us for 3 minutes on the markets. Paul, let me put this question to you. Should the EM kind of area and universe be pricing in this trade deal more aggressively, especially when it comes to likes of the carry trade?
Hi, good morning, Kriti. Well, it certainly seems that markets have got a little bit of a wake-up call in the recent days. We were at the peaks for the year just last Wednesday, but since then we've embarked on our worst losing run of the year in Asian equities, and likewise Asian currencies are at a couple of months low. So it is as if that effect is suddenly starting to show up a little bit more in people's conscious and in the way that they're pricing those markets. And so therefore, you know, that weakness is coming through. And in particular, today we've seen it with the likes of Taiwan and South Korea, which are at the bottom of the rankings, but feeding through into other countries across the region. Plus, there's still bits of uncertainty related to those nations kind of closest to China about what the feed-through tariffs are going to look like and whether that's going to be additional burden, whether, you know, kind of there's ways that people can work around it and so on and so forth. So a lot of uncertainty hanging over everything, but it certainly feels like all of a sudden everyone's aware that this is now coming and it's unavoidable and it's going to have a bigger impact in the second half of the year.
Paul, the U.S. dollar is on a 7-day winning streak. Whether that's related to tariffs or not is still a question. But do you think that this streak for the dollar can continue? I think NFP will probably be the kicker of where to next. What's your thoughts there?
Certainly, payrolls is going to be very instructive for today. But I think longer run, you know, we've had this narrative all year long about the idea that there's too much overseas money in U.S. assets, in U.S. stocks and in U.S. bonds relative to the opportunities all around the rest of the world. And I still think that stands true, and I still think that longer-term trend for the dollar weaker is going to reassert itself at some point. It doesn't mean necessarily next month. Doesn't necessarily mean, you know, in the coming quarters. But at some point, you know, we're going to continue to feel that drip lower. And I think the one thing that will be quite a strong determinant of that will be what the Fed does. At some point, the Fed is going to start cutting interest rates again, whether it's with Powell in charge or whether it's with somebody else. And that again will be another drag on the dollar and allow a further easing.
Paul, is Valerie right to be excited about payrolls today?
I mean, there's a lot to be excited about. We've known that it's going to be a busy week. If Valerie's still got the energy to be excited about that after everything we've been through over the last 5 days, then well done her. I think that of all the things, that's not really the factor that I would pay most attention to when we've had all of these earnings. And actually, I think what was really interesting yesterday was the way that the market traded, despite the positive earnings that we have from Microsoft and Meta. Even Alphabet after the close, we still got the Nasdaq ending lower, and we still got futures lower again today. So there is that sort of rumble in the background. Questions starting to be asked. Have we seen the peak for the year? Is that it as far as the tech rally is concerned? So, yes, payrolls will be instructive, and we'll see what we get next week.
Absolutely. Paul Dobson, their Asia Markets Executive Editor, walking us through a tour of the world. What to watch in the markets universe. We thank you so much. Let's go from the macro to the micro. Get our stocks to watch with Chloe Melly. Chloe.
Good morning, Kriti. Let's start with the 39% tariffs on Switzerland that were announced. So we should keep an eye on some key Swiss names this morning. Of course, the pharmaceutical industry with Novartis and Roche. But also, we should keep an eye on watchmakers like Richemont and Swatch, and then industrial companies like ABB, because there might be a little bit of weakness this morning on the back of that tariff news. Moving on, Trump is also going after pharmaceutical industry. So he sent letters to 17 drug makers asking them, demanding that they lower U.S. drug prices. So Novartis is actually on that list, so it faces kind of a double whammy. But we should also keep an eye on other key European names in that space. So AstraZeneca and GSK that have been actually doing quite well, but then also Novo Nordisk and Sanofi, which have seen a fair bit of weakness. Trump did say that he was going to deploy every tool in his arsenal, so pharmaceutical companies are going to have to deal with that moving forward. And then finally, Daimler Truck. So truck maker Daimler Truck lowered its outlook due to U.S. tariffs. It's actually been doing quite well. We can see just a dip here in April, but it is actually up 24% over the last 12 months, and it's also been outperforming its peers, so Stratton and Volvo. We can see it here. It's been outperforming a little bit, but we'll see how much weakness we get from that lowered outlook this morning.
All right, Chloe Melly, our equities reporter, walking us through some of those early stocks that are potentially going to move at the open. It's not quite done with earnings this week, so of course we'll keep a close eye on that. In the meantime, futures over in the States are actually lower. When you look at it here in Europe, lower as well. Is that simply just cash off a little bit, or risk off is I think what I'm trying to say?
Risk off. We can go with cash off if you want.
Cash off, whatever. It's Friday. But ahead of a weekend, a little bit of a pullback in some of those numbers there. Or maybe just caution ahead of that payrolls report. Lots to digest ahead after the opening trade. And, of course, pharmaceuticals are going to be a key part of what we're keeping an eye on. Stick with us. This is Bloomberg.
Friday morning, good morning, how you doing? Let's talk about yesterday's session and what it tells us about maybe where we go from here. Europe rolled over, the American market rolled over, the US rolled over, which I think is really interesting considering we had some pretty solid tech earnings the day before. Microsoft and Meta look pretty good. You got some certainty around tariffs. Like, is certainty enough, or do we actually need to figure out what impact tariffs have? So things unwound a little bit. Now, yes, end of month, all that kind of stuff needs to be folded in as well. But how good was the price action yesterday? Or is it just telling us it's time to go into August, enjoy yourself, sit back, eat the ice cream, and go from there and wait until September? Maybe that was the trade yesterday. Val, what do you got?
Look, it's looking pretty bad when it comes to the futures picture. We are at session lows just a minute before the cash equity open. Stoxx 50 futures down 1.1%. DAX futures down just a slightly more, down 1.2%. Session lows for European equities and U.S. stock futures. Kriti, what single stocks do we have our eye on today?
I mean, the earnings aren't quite yet over. IAG is going to be crucial when we come into those numbers, and whether or not it's well received by these markets. It looks like the IAG CEO is starting to make some commentary around London capacity, around transatlantic demand, and of course an update on TAP over in Portugal as well. Daimler Truck is another one that we've got our eye on, but I think pharmaceuticals are going to catch a lot of attention. As Guy points out, there's one name in the Swiss business that is not on that list from letters sent to 17 international drug makers. We'll see if maybe they're the outperformer in the pharmaceutical trade and how that shows up in the overall Swiss market, and not to mention the Danish one as well, Guy. Looking forward to how the market open shows up.
Yeah, Swiss market's going to be interesting. Danish market's going to be interesting. Pharma stocks are going to be interesting more broadly. There's all kinds of factors to throw into the mix here. We'll see in a moment just how this goes. Here we go. Time for the opening trade. Let's show you some numbers. Let's give you an idea, particularly of how that SMI trade is going to work its way through. Switzerland singled out, it seems, in terms of the negative story surrounding trade. 39% is the tariff that's going to be applied. FTSE's going nowhere in a hurry. We'll just kind of park that one for the moment. Stock 600 down by 0.3% of 1%. The CAC's got a few pharma stocks in it as well. We'll see what Sanofi does this morning. We'll work our way through that one. We were talking about EuroNext a little bit earlier on. DAX could take a little while to get open as well this morning. We've got a few car stocks that we need to fold in. The IBEX is out of the gate down by 0.5%. It's quite a negative story emerging here in Europe. Remember, we've still got a long way to go today. We've still got payrolls to work our way through. ISM's coming up a little bit later on the manufacturing front out of the United States as well. I mean, the one market I'm going to watch this morning is the SMI. It's not open yet. We are getting a reaction, obviously, in the Swiss franc. We'll see how that market opens in a moment. We'll see how the pharma sector opens in just a moment as well. Val, Val, talk us through that story. What is happening with the sector narrative?
Well, it's no surprise that we do have healthcare at the bottom of the basket when it comes to your sectors. As a sector, it is down some 1.5%, the worst performing sector so far in this morning's trade. Only one sector in the green at the moment, the rest 19 in the red. But when it does come to the single stocks, the one pointing out to me is Novo Nordisk, down some 4%, one of the worst performers so far in the few moments of trade. We also have real estate, utilities, and banks being at the bottom end of the basket. So perhaps it just feels like a risk-off day to me.
A risk-off day, absolutely. A couple of winners, though. We should talk about IAG, for example, and that's the earnings numbers that came out this morning, higher by about 1.7%, and that's going to be a crucial one, although I'm not seeing that in the early kind of volume movers. Maybe that'll show up for a moment.
I just want to check stock exchange holidays today. We get a little email earlier on, which I didn't check this morning. Guess which market's closed today?
Oh,
Is it the Swiss market?
Yep.
Oh, no. How are you going to talk about Roche now?
How am I going to talk about any of this now? The Swiss market's closed. How did we miss that one?
But we're getting a couple of read-throughs in some of the other pharmaceutical stocks when it comes to the Euro stocks. So Novo Nordisk, AstraZeneca, Sanofi, certainly trading with a lower bid, as you point out this morning, Val.
Yeah, with healthcare underperforming. I mean, this was a theme we saw in yesterday's session as well. Eli Lilly took a hit on the back of this letter that Trump sent to drug makers on lowering their prices for the U.S. So this theme does seem to be running into the European session.
Okay. Switzerland, I have nothing else to say. We're done.
Now you're done. You're done with the show.
I'm A, embarrassed that I missed it, and B, slightly shocked that I don't have a narrative to focus on when it comes to what is happening with this pharma space. But Novo's getting hit and whacked pretty hard.
Well, some of the ones that are listed on the Euro stocks are very much getting hit. So this is absolutely a narrative to pay attention to. But again, first day of the month, not really kicking it off strong. That Friday feeling certainly showing up in these markets. We've got the perfect guest to digest what's going on and how we can perhaps move forward. Nancy Curtin, CIO at Alti Tiedemann Global, joins us around the table. Nancy, we've been talking for months about tariffs. We're talking all morning about pharmaceutical tariffs, and there's certainly letters about what the Swiss market is going to talk about. Do tariffs matter at the end of the day when we're talking about how to trade this market?
Well, first of all, look, I think the tariffs are going to come in around the 15 to 17% mark. That's a far cry from the 40% effective tariff rate if you included the trade war with China that we were looking at April 2nd. So that's number one. Number two, tariffs raise money. So let's not forget that. There's a lot of mayhem and chaos and uncertainty that comes with tariffs. But there's about $25–30 billion coming into the Treasury coffers every month. Multiply that by 12, $300 billion. Add a couple of years on that. You can begin to raise some money in the United States, which is not such a bad thing. And in addition to that, in these trade deals, and by the way, we've had 7 of them at the moment, the dominoes seem to be rolling over, countries have committed, deployment remains to be seen, to spend a lot of money in the United States. If you just take Japan and the EU, I add up to more than $1.5 trillion now. Remains to be seen what actually happens here. But there's some good sides to tariffs as well. I want you to think about it in the context of maybe there's a bit of a wealth shift from the rest of the world to the United States.
How long does that last? Is that ultimately a tactical move, a short-term, 2-year-end tactical move, or is this something that's going to last the next 10 years?
Well, of course, you have changes in administration, you have changes in policies, these so-called trade deals, or, I don't know, written on a napkin and, 5 pages and MOUs and subject to negotiation. So these are not comprehensive trade agreements. We'll have to see what actually happens over the next couple of years. But I think the U.S. will probably look to make part of these tariffs more permanent because they are raising money and because access to the U.S. market is attractive. So where that comes, past the Trump administration remains to be seen. But I think if you look back what Biden did, he pretty much validated the tariffs that Trump had put into place when he came into office. So let's see.
Okay. Let's put all of that to one side because I'm not sure any of all of that matters. And here's the reason why I say that. The S&P is trading on 22 times, 22 and a half, I can't remember what the exact number is. And that's tech. Does anything else matter for investors right now? I've got the Fed, I've got all the stuff that Val gets excited about, non-farm payroll numbers, all this kind of stuff. We've got tariffs, we've got all of this stuff to fold in.
You sound like Dan Ives over at Wedbush.
But it doesn't matter. Well, no, but it doesn't matter. Okay, I'm not making a call on whether or not this is justified. I'm just saying at the moment, that's where the story is. And as long as that narrative continues, I have to be invested in these stocks. If I'm not invested in these stocks, I'm going to underperform my benchmark. That's the trade.
Well, let's first look at 22.5 times. Okay,
Yep.
that's 7 stocks that traded a weighted average of 35 times. Okay, and the rest of the market that trades at 16.5. And remember, the U.S. market today, operating margins are kind of 12 to 14%. That's a far cry from where they were a decade ago. So looking back on a PE multiple 10 years ago, I don't know, is that really applicable? So again, I put that out there. However, markets trade on the outlook for economic growth and earnings. And here I think the story's pretty good in the United States. Yes, probably a slowdown this year from where we were in 2024. But look, the consumer's still in good shape. There's a huge amount of wealth, 170 trillion of net worth in the States. I just put that out there, 650,000. I know there's a disparity in that number, but 650,000 per household is pretty interesting relative to the rest of the world. You've got Gen AI happening, right?
Yep.
And that's an improvement in productivity. And it could just be that investment spend, CapEx, surprises on the upside. The I of that little formula actually surprises. It's been pretty moribund. Take a look what the tax bill has done. Huge benefits from the tax bill. Bonus depreciation, 100% expensing of R&D. Combine that with Gen AI. I see those numbers went up in the last couple of days. And then the commitments on the part of countries and companies to invest. Let's keep an eye on this. As I said, it could just be that we see investment spending surprising the upside. Remains to be seen. There's a lot of mayhem and chaos, but I think that may just be the surprise that people aren't focused on.
Nancy, I want to talk a little bit about your estimated number for tariff revenue, which I've heard people talk about as well, this $300 billion a year. Can you talk to me about, given you seem very positive on U.S. assets, who is paying that tariff revenue, and is it essentially, does it matter at the end of the day who's paying it, or is it just going to be diversified, across the supply chain, so it's not necessarily the exporters or the importers taking the hit?
Look, that's a great question, and I think the answer remains to be seen. We don't know. But our sense is, first of all, tariffs is one time, so it's not a permanent, persistent price increase. Even Chair Powell's talked about that. Our sense is could well be that the cost increases from tariff get dispersed across the supply chain. Mm-hmm. So what I mean by that, the exporters take some, the importers take some, the distributors take some, the retailers take some, the consumer takes some. And so the actual impact on the end consumer, which had been the concern, may be less than feared. Now, we'll have to see. We saw in the PCE number yesterday, we saw an increase in furniture, apparel, other things. Costs are going up on the good side. But remember, of the PCE number, 70% is services. 30% is goods. So goods prices could come up. I'm really focused on what's happening in the service economy. U.S. is fundamentally a service economy. So, I think there are some counterbalancing things we have to watch. We won't know for sure. I think Chair Powell did the right thing. Let's wait and see how these tariff increases impact inflation in the United States. But I don't see it as being persistent over time.
So it seems like, we've obviously gotten a lot more clarity on the tariff picture from the Trump administration. He's passed this tax and spending bill already. It seems like a lot of his agenda is done. Maybe the big questions out there about deregulation. Is there any other agenda topics you're watching out for?
Well, with Trump, every day's a new day. I think, does that man ever sleep? You know what I mean? Just so much comes out every day. But you mentioned deregulation. That's positive, right? What do we have? We've got slashing the SLR ratio. That's good for banks, good for lending. We already saw an increase in dividends, a commitment to buybacks for the major central banks. So that's positive. We have commitments and deregulation for the energy industry, LNG, and we saw very, very big purchases the EU has agreed to buy. And then I don't know what, the AI action plan means, and Genius and Clarity on the crypto side, but it's clear that innovation is not going to be heavily regulated. Let me put it that way, right? That 90-page and all these pillars and so on and so forth, details lacking. But I do think Trump isn't just about making sneakers and sort of shoes and stuff. He also has a keen eye on innovation and protecting that IP in the States, and that's probably positive as well. So deregulation, good for growth.
Well, it's fascinating you talk about deregulation because Val and I do some stock mover hits in the morning and sometimes for early morning U.S. television and radio. And it feels like in the last couple of weeks specifically, Val, tell me if I'm getting this right, there has been a lot of M&A news, a lot of consolidation, a lot of deals that have not happened 6 months ago, to the point that we're not even calling it M&A Monday anymore. It's M&A Tuesday, Wednesday, Thursday, sometimes Friday. Talk to us a little bit about the risks around some of that, though, because the consolidation here is happening from bolt-on acquisitions, et cetera, but they're not happening, they're not IPOing. Figma was the exception yesterday, not the rule. Is that a mismatch that the market needs to pay attention to?
Look, 2025 began with the view that we would see animal spirits and M&A and IPOs pick up. Okay, then we went smack into Liberation Day and all that died and people stopped doing deals, or at least they postponed them, and the markets, almost went into a bear market, et cetera, as you well know. But I think more recently we are seeing some interesting IPOs certainly coming out of the tech sector, and they are trading well. I mean, I saw that one yesterday. It's kind of crazy. But and we are seeing a pickup in M&A. So we think what's happened is these are deals that had already been in the pipeline, paused because of April and the uncertainty in markets, and just right back on again. Now, look, M&A is typically good for the market. You're paying a premium for a company. You're consolidating an industry.
Yeah.
You give a company the ability to think about how can I save costs through integration, become a more dominant player, maybe pricing power. So M&A is no bad thing for industries. It does remove more stocks from the market. And I think one of the things that we feel strongly about at Alti Tiedemann is that we have both public and private markets. Remember, the U.S. market is, 4,000 if you look at, small, mid-cap, large cap. All right, it used to be 10,000. So, private markets are really interesting for us as well. So we're not just in the public markets, which obviously are more concentrated.
Nancy, great to see you. Thanks for stopping by. Really nice to see you.
My pleasure. Yeah.
Nancy Curtin, CIO at Alti Tiedemann Global, joining us on these markets. Let's talk more about the moves that we're seeing. Certainly the pharma sector. Swiss are closed. I've got that point now. The Swiss market is closed, but there are pharma stocks trading elsewhere. So let's start off there. Chloe, what you got?
Good morning. Yeah, let's start with the big story of the day. So Trump sending those letters to drug makers and asking them to lower drug prices. That has having quite a bit of impact, actually, on the pharmaceutical sector across Europe. We've got AstraZeneca, GSK, Novo and Sanofi down. Novo Nordisk taking the biggest beating there, almost down 4%. Moving on to IAG. So IAG is the parent company of British Airways, and it reported earnings that were quite positive. So sales and profit beat estimates this morning. It is up 2%. It did note that it was cutting its forecast for capacity growth due to engine issues and also air traffic control strikes. But overall, it seems the market is focusing on those earnings, those positive earnings. Moving on to another earnings story with Campari, the drinks company. It's up almost 9% this morning. Its profit also beat estimates, and analysts said that increasing marketing spend was kind of a proof that it was very positive about the third quarter. And then finally, another positive stock this morning is Melrose. So Melrose makes components for civil and military aircraft, and it reported positive earnings this morning as well. It is up almost 8%. It's seeing really growing momentum with that defense space. So we've got shares up 7.3% at the moment with Melrose.
All right, Chloe Melly from our equities team, we thank you so much walking us through some of those early movers as well. Coming up on the program, we're going to go right back into the earnings story. Of course, that's going to be a crucial one. IAG cutting its projection for capacity growth this year, citing challenges around aircraft engine reliability, as well as air traffic control issues. We dig into the earnings from the British Airways parent company next. Stick with us. This is Bloomberg.
Welcome back. You're watching the opening trade. We are, let's call it 18 minutes into the market session. And as you can see, we have a fairly negative story on our hands this morning. We certainly saw a rollover in the stock story yesterday, particularly in the United States as we came towards the back end of the session. That's now being replicated here in Europe. There's obviously some big macro events coming up, the main one being Nonfarm Payrolls. That will drop a little bit later on. We've got plenty of other things we need to be focusing on as well. It's the 1st of August, so you want to bear that in mind too. But we do have some earnings that I think are probably worth spending a little bit of time talking about. IAG, owner of British Airways, Iberia, etc., out with numbers this morning. And as you can see, the stock is a little higher. This as it reported revenue for the second quarter that beat estimates. But the company has cut back on its projection for capacity growth for this year. Let's talk to Bloomberg's managing editor for space and aviation, Benedict Campbell. Benny, what are they saying about the demand story? Because everybody's watching this very carefully, particularly on the North Atlantic.
Well, that story looks intact, and that's something that we've really heard from a number of airlines this week. IAG is the last one to report. We heard from Lufthansa, we heard from Air France earlier this week, and the overall message is that right now things are actually looking pretty good. People are still traveling, particularly from the US into Europe. Remember, the weak dollar is helping a lot of tourists come over here. The picture's a little bit more murky going the other way. Fewer people going to the US, particularly at the back of the plane. But if you've invested in your premium product like Air France, if you have a robust business class like IAG, like British Airways, then you're actually in a pretty good position. So that's really helping the outlook.
Benny, we also had an update from the IAG CEO saying he's still interested in TAP Portugal. What's the latest on that?
Well, there is a little bit of consolidation still going on in the European space. Not too many assets up for grabs, but TAP is one of them. That's the Portuguese carrier. The government is the owner. They want to put that up for sale. And it's an attractive asset, particularly for IAG, because they own Iberia, they own Vueling, so they could strengthen their position into the Latin American market. But they're not the only ones. Air France, KLM, they've also said they're interested, as has Lufthansa. So it'll be very interesting to see how this plays out. We know that some airlines have bought other assets. Lufthansa bought ITA in Italy. Air France just recently bought a stake in SAS in Scandinavia. So there is still some of that much overdue consolidation going on, and TAP, one of the very last remaining items.
Benny, talk to us a little bit about London Heathrow. I mean, I feel like this week we've had some issues when it's come to technical glitches, a brief grounding of flights as well, but now they're proposing a £49 billion expansion. Will it ever happen?
Probably you and I will never fly off that new runway. I'm going to wager that guess. I mean, these projects, as you say, huge, 49 billion. The runway alone, just north of 20 billion. These are fiendishly complicated projects. They take much longer than anyone expects, unless you live in Qatar or Saudi Arabia, where they seem to be able to pump these out in 5 minutes. But over here, these things take longer, they're overdue, they're overcost. This is something that I've written about for the better part of 20 years. This is the latest plan. So I'm going to be a skeptic and say we'll see something happening, because Heathrow does need that extra capacity if they want to maintain their lead in Europe vis-a-vis places like Frankfurt, like Charles de Gaulle in Paris, and particularly vis-a-vis airports like Istanbul or Dubai or Doha in Qatar. But these things, as I said, will take time, and whether a government has the stomach and really the stamina to see it through over a long period of time, that's the open question.
Benny, we've seen a series of airlines out with numbers over the last few days. What is the aggregate takeaway from the European space, and fold in the US space for that matter as well? Is the consumer still spending money? Is there still demand for the travel story that has buoyed these stocks over the last few years? Is there any kind of cracks in the armour of that narrative?
If you break it down a bit, it's the affluent consumer that is spending. Those are the people at the front of the cabin, people who buy business class tickets for leisure travel, people who buy premium economy. The softness is in the back of the cabin. We heard this from the US carriers, particularly on the domestic market. That's a difficult market right now. We've also heard it over here from Lufthansa, from Air France, and so on. So front of the cabin's doing well, back of the cabin less so. Lufthansa also said that people are booking later. So it's very difficult to sort of get a sense of where the demand picture is, because there's just not much of a sense. People are booking late, people are booking shorter, both in terms of duration and where they're going. So there are some shifts there, but we're probably in a slightly better place now than we were a couple of months ago, when there was open panic in the industry and a lot of downgrades. We're through that now, but the rest of the year, if you look closely into the releases, and IAG said something similar today, saying there are some cracks in the picture. Overall, it's looking okay, but we need to be very careful in terms of maintenance of aircraft, in terms of demand at the back of the plane. So it could really go either way, but right now the glass is sort of half full, and if you look at how the stocks have done, that's probably the view of investors as well.
Bloomberg's managing editor of Space and Aviation, Benedict Campbell, walking us through the aviation story. We thank you so much. He, of course, will bring us those updates as we have them. Let's go from the aviation sector to the pharmaceutical sector, where companies around the world are receiving letters from President Trump about the cost of medicine. He's demanding drug makers charge the United States while other countries pay for new medicines, and has given them 60 days to comply. For more, we're joined by Sam Fazeli, who leads our research at Bloomberg Intelligence. We thank you so much, Sam, for making time for us this morning. Can you just walk us through the logic and ultimately the impact of this?
Yeah, sure. I mean, the logic is pretty straightforward. Everybody believes that the US is paying so much more for medicines than the rest of the world is. And even the companies admit that. Of course, they say that a lot of this is because a lot of the innovation happens in the US. So we're waiting to see how the US can actually implement this. And of course, we have this letter now from President Trump, which has got 4 elements in it. And you've got a couple that are pretty straightforward. First one saying, get this most favored nation pricing, which would mean much lower prices in the US, to Medicaid. We believe that's already the case. Provide direct purchasing of medicines at that price. The pharma companies have admitted that that's a good idea, and they're trying to do that. Then there's 2 elements in the middle that really surprised me. And honestly, I don't know how you can actually implement that, which are return the increased profits you get from other countries if you manage to raise your prices there to the US. Well, what's the legal basis for that? And how is that ever going to be implemented? And then, of course, the 4th element is guarantee lower prices on newly launched drugs. There's a positive there, because that means you don't have to lower the prices on the current existing drugs. So at the end of the day, what is the legality of all this? We'll have to wait and see.
Sam, the Swiss market is not open. I'm going to reiterate that, mainly for my own embarrassment. But why is Roche not on the list?
Well, I mean, I think Switzerland seems to have not done a deal with the US yet. You've seen that potential 35% tariff that's been talked about. I think that's the number that I saw. There's been so many different tariffs being announced on different countries. That doesn't seem to exclude pharmaceuticals. So maybe that's the point there, that they want to get the compensation. Okay. But Roche is also...
Sam, I'm just going to jump in. We are having some small connection issues with Sam Fazeli. We'll try and rectify that for the next conversation we have with him. Anyway, Sam Fazeli, Bloomberg Intelligence, senior pharmaceutical analyst. There's a few issues with this pharma story that comes out of the Trump administration. He tried it in the first Trump administration. Other presidents have tried it as well. This is a tough thing to do. So we'll see whether or not there's any success. Maybe when the Swiss market opens, we'll find out.
This is officially turning into a Monday story, at least for the Swiss market. But he was making the point that there is a trade deal here as well, or a trade dynamic to be keeping an eye on. Novartis, however, is on the list, and that's another major Swiss pharmaceutical. So we're going to get an angry letter from Roche after this conversation.
I can't work out. One of them reports in dollars and one of them reports in Swiss francs. I can't remember which way round.
Maybe that's the reason.
Maybe that is the reason. Anyway, we'll carry on the market coverage next. We've got a European market. It's a little softer this morning. We'll carry on the coverage of that. Ex-Switzerland. This is Bloomberg.
This is the opening trade. 30 minutes into today's session, we are seeing a sell-off on our hands. It's the first day of a new month. It is also a Friday. It is also several markets are closed across the board. But the ones that are open, we are seeing a pain trade here, down about 1% when it comes to Stoxx 600. The DAX is the underperformer. Well, it kind of traded with the CAC as well, down almost 1.5% in today's session. Not exactly kicking off the new month with a bang, guy.
Absolutely not. Let's take a look at the internals, figure out what is happening here. Higher 79, lower 449. That's the story. As you can see, the market definitely weighted to the downside. Volume's actually a little bit light. Let's talk about some 52-week highs, 52-week lows, and figure out what is happening there as well. Give you some names and numbers. IAG, the airline sector, up positive this morning on the back of its numbers. It's up by nearly 2%. Erster up by 1% as well. GEA Group unchanged, but at a 52-week high. The lows are probably more the interesting story this morning in terms of the narrative that we are watching. And here, take a look. Novo Nordisk, Pharma space, down by nearly 4%. That's a 52-week low for Novo Nordisk. It is rolling over. I think it's out of the top 10 in terms of the most valuable companies in Europe. I should also point out that I've resolved the Roche issue. It's Genentech. Genentech is acquired by Roche, as a result of which it is on the list and Roche is not. It is the proxy for Roche on that list coming out of the United States. But look at Sanofi. It is tracking lower as well. Zealand Pharma is tracking lower. The pharma space is seeing a series of 52-week lows today. Val, that is the narrative. That's what we're watching very carefully, even if the Swiss aren't here. What have you got?
Well, here's what else you need to know this morning. Amazon shares tumbled in extended trading after it said operating income will be weaker than expected. The company has invested huge amounts in AI infrastructure, and although second quarter revenue jumped 13%, it trailed sales growth by its cloud rivals. On the flip side, Apple shares jumped in late trade after the iPhone maker beat expectations on a number of key metrics, including its closely watched iPhone and China sales. President Donald Trump unveiled a slew of new tariffs that boosted the average U.S. rate on goods from across the world, forging ahead with its turbulent efforts to reshape international commerce. According to Bloomberg Economics, the average U.S. tariff rate will rise to 15.2% if rates are implemented as announced, up from 13.3% earlier. And lastly, shares of Daimler Truck are falling this morning after the company lowered its outlook for the year, pointing to weaker sales in North America, where tariff-related uncertainty is causing buyers to postpone orders for new trucks. Guy?
Valerie, thank you very much indeed. You've got a market this morning that I think has been driven over the last few days by the earnings story, and I'm wondering kind of how we fold all of this in this morning. Is what we're seeing today is there any earnings in there this morning? It doesn't feel like it. This doesn't feel like it's an earnings-driven market for the first time this week. And I'm wondering ultimately kind of where we go with that. Is it a tariff story? And if we're back to tariffs, kind of how do we price that in, considering the lack of uncertainty? We thought we had certainty, but in reality, actually, I'm not sure there is the certainty. It doesn't feel like it's black and white on the certainty story this morning. And then you've got all of the macro data to fold in as well, which I think is equally as confusing. So what is the narrative this morning? Is there a narrative? Is there an overriding narrative that we need to think about?
I think it's officially summertime. It's August 1st.
I'm up for that.
It's a Friday.
Yeah.
You're off next week.
The Swiss are off.
Yeah, the Swiss are off. Guy's going to join them in the Alps. But I genuinely think that's what it is, because I think we're now waiting here for margin compression, earnings, and the kind of tariff numbers that we've seen from Ford, that we're seeing from Mercedes, from BMW, from all of these kind of concrete numbers that are coming from the companies themselves that have hesitated to give us that clarity because I don't think they had it, frankly. I think that's where it comes from. So now it is a more quantitative operation.
Well, look, now we got the tariffs. Now we sit here, on our hands waiting for it to show up in the economic data.
Yeah.
And whether it ever actually does, if you want to take the bullish case, or whether we see it today in non-farm payrolls, whether we see a drop in the participation rate, a shoot up in the unemployment rate, that would be a first hint that maybe tariffs are starting to impact margins and these companies are starting to lay off workers.
Yeah, it feels early for that. That certainly wouldn't tie up with what we've seen in terms of the narrative coming out of the corporate reporting season. But I think, to your point, I think it's going to take a little while for a little bit of clarity to resolve itself, to present itself. Let's talk about kind of where we are. Have we got some more certainty? Do we know where we are? Ali Radisson, Director of SEC Newgate and former advisor to UK Business and the Business and UK Trade Secretary, joining us now on the line. Ali, thanks first of all for getting up early for us. Secondly, we're here. It's the 1st of August. How much clarity do we have? Do we have significantly more certainty than we had yesterday? How much certainty do we have as to what the tariff picture actually now looks like?
Morning. I think we have clarity about where things might go, but not when it's exactly going to happen. And that's what we keep seeing, is sort of things being kicked down, the can being kicked down the road effectively, because we have sort of some top line numbers about where sort of countries' upper baseline rates will be. But we also now have another sort of 6 to 7 day extension for Mexico. It's up to 90 days. And basically, I think what Donald Trump is sort of, some might say he's given some time to sort of adjust to the new upper sort of tariff sort of ceilings. But ultimately, actually, it's more about possibly giving some extra time for countries to negotiate sort of concessions. And B, for some of those countries that he's announced deals with in the last sort of couple of days, we have a few headline commitments, but it's basically, here's a baseline rate, and we might get some more exemptions as we carry on negotiating. So the picture is still pretty varied all around.
The question we're trying to now answer is how long does this take to show up in the data? Is it showing up in the data? What evidence are you seeing that this is having an effect?
I don't think we're seeing a huge impact yet because so many businesses are trying to figure out how long they can wait to make sort of absolutely big decisions effectively. And so you're seeing a sort of the staggered impact, or the staggered nature of the tariffs themselves is having a staggered response from companies ultimately. I think where you're starting to see it bite is probably not so drastically, but also, I think we're in this sort of picture increasingly of stagflation where it's not showing up in the inflation numbers yet, but the economy is not taking off either because you've got all this sort of uncertainty leading to paused investment decisions, paused hiring decisions, paused decisions on wages. So you've got this sort of a middle of the road approach to we're not going to react just yet because we want to see what the final outcome is. And by the way, can we negotiate some further exemptions on a sort of sector by sector basis?
Ali, given your former position as advisor on trade, is there other ways outside of tariffs that maybe Trump could use in order to, claim success on this manufacturing renaissance that he wants? Are we being a bit naive that thinking that perhaps his trade policy is done because his tariff policy is mostly set?
Yeah, I mean, that's an interesting question. If you look at the White House kind of websites, they love to publish headline stories about kind of investment decisions, a lot of which actually are probably already happening. But certainly he's sort of trying to claim credit for any kind of announcements about sort of onshoring, reshoring. There's the big question mark around kind of his regulatory policy. So his argument, in addition to the one big beautiful bill that was sort of passed recently, which the tariff is trying to offset because there's a huge amount of spending in that legislation, is he's doing loads of executive orders around kind of deregulation to sort of say, listen, it's not just about increasing tariff revenue in terms of impacting business. We're trying to deregulate to get the economy moving again as well.
Ali, you mentioned tariff revenue there. We just had a guest on the show saying that what she's penciling in for an annualized tariff revenue is around $300 billion. Is that similar to where you stand?
Yeah, it's certainly similar to the numbers that you hear the Commerce Secretary, sort of Howard Lutnick, talking about, although I'm curious to see the actual numbers, not just the declarations in terms of what's coming in. Now, keep in mind, there is a possibility that some, if not a lot of that tariff revenue actually gets sort of paused and not potentially rebated because there was a court case that is pending. We had hearings yesterday here in Washington, which basically says that all the countries, President Trump's country by country tariffs, the legal basis for that is unconstitutional. And then effectively, if it may go to the Supreme Court, but if basically the appeals and or the Supreme Court upholds that, a lot of that tariff revenue gets rebated. So I think the picture is pretty muddy at the moment.
Well, Ali, it's Kriti in London. Walk us through the timeline of that. Court cases aren't famously exactly speedy ventures. What kind of timeline for our financial audience can we expect in terms of clarity on that front?
Yeah, so ultimately, initially, this was a ruling from the International sort of Trade Court that effectively in New York that basically said the legal basis that Trump has used is unconstitutional. That was then immediately paused on appeal, and it's gone to the Court of Appeals. Now, I think we're probably talking, even though it's doing it on an expedited basis, 1 to 2 months. And so there's some people that say, well, maybe that's why some countries, like, for example, India, have not given out because they're waiting to see if some of it gets paused. I think we're talking about if it goes all the way to the Supreme Court, keep in mind that I'm sure that President Trump has other legal basis in his arsenal to use, but we're potentially talking about, let's say, up to about sort of 60 to sort of 70 days.
Ali, talk to us a little bit about the rate here, because I think there's a background concern. It's not consensus at all, but there is a question here about whether Donald Trump changes his mind over the remainder of his term at some point with some of these rates. Yes, we're at 15% right now, broadly speaking, with some of the major partners, but at one point we were at 70%. 50%, even 30% for some of their partners. What is a cost-prohibitive rate in the tariff universe?
I think, the differential going up for baseline tariffs for a lot of trading partners, the EU, Japan, South Korea, from 10 to 15% is probably still just about manageable in terms of absorbing it and maybe sort of passing some of those costs on to consumers. But for a lot of the other sort of countries, I mean, you look at Switzerland, it's 39%. A lot of that is prohibitively expensive. Now, I think it depends on which sectors are also hit on top of that. And what I mean by that is it's not just the baseline rate that I think that a lot of businesses are worried about. It's the sectoral layering of tariffs. So we still have, for example, tariffs on pharmaceuticals and semiconductors to come. And I think if a lot of those tariffs start to stack, you're getting up towards potentially sort of, let's say, the 30-40% sort of baseline. That starts to really have an impact in terms of particularly on large volumes of orders coming through with the U.S.
All right, Ali Renison, Director of SEC Newgate. We will leave the conversation there. We thank you so much for your time and waking up super, super early for us out of Washington, D.C. Coming up on the program, we're going to take a look at the European bank earnings this week and what they kept up with their U.S. peers, plus a court case right here in the U.K. We're going to dive into the details next. Stick with us. This is Bloomberg.
This is something that we can absorb and will absorb and is explicitly implied to our profit outlook for the rest of the year.
We welcome the agreement. We hope it's going to be enforced as soon as possible. And ideally more a matter of weeks than a matter of months.
The main thing is that uncertainty tapers off. And then if it is something around these kind of levels, it should intrinsically be manageable.
This provides certainty. And actually, that's something that we value because we can plan on certainty.
Although we start to getting some agreements on tariffs, we know there's not an overwhelming support for some of these agreements, and we have to be careful to see really what's going to be the impact on the economy.
There's positives, there's more negatives. We have more certainty, for example, on automobile, a lower rate, on airplanes, which are excluded. There's still uncertainty regarding, for example, wines and spirits or pharmaceutical products.
We look at some of our clients, whether they're Western or developed economy companies or companies operating throughout the emerging markets, they're just holding off on their investments to see where's it going to come out.
Well, it's certainly more negative than the situation we had at the beginning of the year when we didn't have this issue on the table. My sense is that this is a lesser evil. We need to be in a position where 3, 5, 10 years down the road, we're in a position to strike better deals with the US than the current one.
Some of the CEOs we've been talking to from across Europe speaking about the 50% trade deal struck between the EU and the US. There still seems to be a sense that has exposed Europe as being weak. And that's something that the US recognised. Now, I think there was a great line I've seen in one of the pieces. It's now something that the rest of the world now recognises. It has been a big week for earnings. We've had an awful lot coming into us this week, trying to kind of separate out what is kind of earnings story, what is a margin story, what is a trade tariff story. I think is a really interesting exercise to go through, and we continue to do that. Leading some of that effort has been Craig Trudell, who leads our autos autos coverage, and tariffs have been a big story there. Jenny Serrain comes to us from the finance team, which she leads. This week has largely been positive for banks. Trying to kind of fit it all together and trying to get an overall picture, I think, is really hard. But having you both here on set probably gives us some great clarity. Craig, let's start with kind of the auto sector. Really confusing, I think. Like Daimler's the latest one out this morning. Daimler Trucks cutting guidance after the tariff fallout has hit its sales line. We've seen, I think, a mixed picture coming through from Europe this week and over in the United States as well, I think. Pull it all together. What do we now know? It's the 1st of August. We've got an idea of what the tariff story looks like. What does it mean for the auto sector?
Yeah, I think for Daimler Truck, you know, the difference in how one orders trucks from this company is much different from, you know, a regular Joe sort of going into a showroom, right? What they're saying this morning is that their customers have been putting off orders. So this is something that even as we see, you know, some potential for relief, you know, we just heard all these CEOs talk about certainty and sort of solidifying. Okay, now we at least know what we're going to be paying. Yeah. This is going to sit with this company for months to come because their customers already have been waiting on that certainty. And this is going to have an effect of you know, sort of sitting with this company for some time. I think what we saw across this sector was no one really was spared, right? I mean, even Ferrari this week, I think everybody was expecting them to sort of rise above the tariff story. Their stock got hit to the tune of like 12% yesterday. I don't think it's necessarily a tariff story there in terms of what freaked everybody out, but this has been a kind of a depressing earnings season, in short, for the auto sector.
Yeah, it's been a depressing earnings season, even for the major U.S. automakers, who in some way you could argue Trump is trying to protect with these tariffs. How do you weigh up the impact to U.S. automakers versus what we've heard recently about Trump having an eye on the EPA, the Environmental Protection Agency, who does a lot of regulation when it comes to miles per gas, and then as well as, you know, the size of the cars that you can have on the road? Is that something that could be a possible tailwind for the auto industry after all this?
I absolutely think there's going to be real relief and it's going to be shared, right, where you'll have the German car makers having free reign to make all those SUVs that they make down in the south and sell as many of them as they want, not have to worry about sort of offsetting some of those with more electric vehicles to please California, because to your point, it's going after the EPA rules, going after fuel economy rules, which are separate, going after California and their ability to regulate. There will be, at the same time, I do wonder how much, as you take that pressure off to improve the environmental capability of vehicles sold in the U.S., how are you now going to sort of improve the standing of the U.S. to export more vehicles as part of these trade deals and boost exports if what you're now making is just more gas guzzlers that the rest of the world is not demanding.
And frankly can't fit on their roads,
Indeed.
as we were talking about earlier this week.
Yeah, I think parking spaces are not built for big American cars here in this country.
Craig, let's talk about two other trade deals that were still left to be figured out, Mexico and Canada. Now, a lot of this is under the USMCA, so problem solved, sort of. But the 35% rate on Canada is crucial. A 90-day extension on Mexico is crucial. Walk us through how that connects to the auto industry and what potential repercussions there are.
Yeah, I mean, we were talking this morning about, the idea that there's real irony in that, you would think that GM, Ford, and Stellantis would have, at least be on somewhat stabler footing. But GM, sort of quietly under the radar is one of the biggest importers. Part of that is from South Korea, which there will be, 15% tariffs now on those vehicles. But these companies are hugely reliant on Canada and Mexico. It is still the case that the U.S. government, when you go into a showroom in the U.S. and go to buy a car from, say, GM, and you look at the sticker on the window that says, how much of the content in it is local, that Canada is included in domestic content. So, this is something that has been sort of taken for a given for decades, that, Canada is okay. Suddenly it's not, right? And that is proving to be hugely impactful to these companies' bottom lines, where Stellantis, GM, and Ford, they're talking about billions of dollars of earnings this year that they will not bring in because of these tariffs. And a lot of that has to do with the fact that, yes, they're bringing in some finished vehicles from Canada and Mexico, but also their parts supply chains in North America are highly interconnected.
Yeah, a fascinating one as well. Craig Trudell, we thank you so much from the auto space. Bloomberg's Jenny Serene's, of course, also here. And there's an auto connection to the banking sector that we're going to make in just a moment. But I want to kick it off with the earnings story, because we're talking about trade deals, we're talking about volatility, we're talking about uncertainty in one of Europe's key kind of industries. Walk us through how that shows up in banking. Is everyone just thriving off the chaos?
There's a little bit of that, yes. So, I mean, across the board this quarter, we saw all of these banks reporting really strong results in their trading businesses. And so that's a direct impact of, the Trump trade, really driving volatility, really driving activity. You didn't have anybody staying on the sidelines. These clients were out there wanting to get positioned, wanting to get hedged, and banks were making a lot of money off of that. But at the same time, when we came into this year, every bank CEO we talked to was really excited about the resurgence of deal activity, and this would finally be the year we saw M&A come back. And that really, we've started to see a little bit of a pickup, but that really hasn't materialized in the way that these bankers promised it would. And so I think that's where you kind of see the downside of these tariffs is, just as we heard about from the auto sector, as we heard about at the beginning of all these other CEOs saying, there's just all this uncertainty, I just need to sit and wait. That's, a banker's worst nightmare. And so they want these guys kind of getting off the sidelines, getting back in the deal arena. And they're still very hopeful that could turn around in the second half of this year and really, bring their investment bankers some good Christmas joy. So we'll see.
Christmas seems like a very long way away. Let's not get ahead of ourselves here too much. After the market closed today, we get this court ruling out of the UK Supreme Court relating to auto finance. Takes us back into Craig's world. We've talked to a series of banks this week, and they're all kind of just on tenterhooks waiting to see what the result is. What are we anticipating here? How significant could this be? What's the market saying about what the likely outcome of this is going to be?
So I think, folks really don't know. So it's up to these judges. And so at the end of today, yes, we will hear if these UK banks are all on the hook or if they're not. There's lots of different estimates rolling out there. The banks so far have set aside about £2 billion. But there's a lot of estimates that say it could be a lot bigger than that. And so after today, once we know the ruling, whether or not the judges rule in favor of the lenders or in favor of the consumer, we'll know if they have to set aside even more.
This is about mis-selling of auto finance.
Yes, that's exactly right. So for years and years here in the UK, whenever you bought a loan, there was a good chance that you were also paying a commission that often wasn't disclosed to consumers. And so that's what the judges are basically deciding, was whether or not that was, in the letter of the law, essentially. And so if they decide no, it wasn't, then these banks will be on the hook for many billions of dollars more. And if they decide in favor of the lenders, I think we'll see some pretty solid movement out of these bank stocks on Monday.
And we'll get that Monday morning.
Yeah, so I think the stocks will largely move on Monday morning.
Jenny, great stuff. Thank you very much indeed. Craig, great stuff. Thank you very much indeed. Jenny Serrain, Craig Trudell. Thank you. The autos and the banking sector. And we merged the two right there at the end, Val.
Well, let's look forward about what we have. There's still a lot of data points set to come today. Even in Europe, we have Eurozone CPI at 10 a.m. And then the focus does shift to non-farm payrolls at 1:30. Consensus estimate is sitting at 104K with the unemployment rate to tick up to 4.2%. We also have ISM manufacturing at 3 p.m. And then lastly, consumer sentiment out of the UMich with some attention on the inflation expectations readings from that.
So we also, earnings, I'm not going to be here next week, but I'm told that earnings are going to be a big feature of the landscape next week. So it continues. We're not quite through it yet. There are a few, actually, Jenny's still here, so we should probably ask her about this too. Commerzbank is out with numbers next week. What are we looking for there?
I think, the big thing we always want to know about with Commerzbank is how they feel about M&A.
Yeah. UniCredit more specifically.
Yes, and how they're, positioning themselves to maybe defend against that, or are they softening to that idea at all?
Okay. Well, I think we're going to talk to the CEO next week, so we'll find out more about that. But we're almost done. The weekend is almost upon us. The Swiss are already on holiday. I'm going to bring that up again because, obviously, I feel I should. The Weekender, though, is here. A Superman movie. Who's going to see that? Anybody going to see that? Formula One Grand Prix. That's Craig's world. I think he's going to be watching that. Yeah.
And the last Oasis show in London.
Is it?
Yeah.
I hear they're quite good.
They're on tour for a while, but, the London fanfare might be coming to an end.
OK. And then there's the Lions game, 11 o'clock Saturday morning. We've already won the series, but I'm going to be watching that first thing on Saturday morning. We're going to be getting up early, making sure that we're there. So that's my weekend pretty much sorted.
The Superman movie isn't getting enough love, to be completely honest.
Are you going to go?
No, but that's not a Superman thing.
It's too American
that's a movie
for the
theater
London
thing.
audience, isn't it?
I guess. I don't know. Isn't Hollywood global? Who knows?
Yeah, I feel like I've watched, over the course of my life, I feel like I've watched many Superman movies.
Been too many.
You can never have enough.
And that's...
I'll go back to the cartoons instead, right?
Okay, fine. We'll focus on Oasis. Anyway, the Bloomberg Weekend newsletter will be out. You can catch that as well. Enjoy the weekend, folks. This is Bloomberg.